Okay, good evening, everybody. Welcome to all of you at the ACCA Practice to Pass session of paper F7, that is financial reporting. And today, as we have discussed in the last session, that we have to cover some of the topics relating to the disposal of subsidiary, relating to the consolidation. I hope my previous lecture of day 3 has input some values in you in terms of the concepts of consolidation. And I have received some emails from the students who have attempted the question paste maker and hostel link. Some are struggling in the question, but I will reply you because of some hectic schedule. I have emailed the constructive response and the answers to some of the students, but I will surely, inshallah, by the end of Monday, I will reply you all about the constructive feedback and your answer script. So it is very important for all of you to do the lot of practice, but the practice should be for the limited questions. Do not do over practice of a particular topic. You have to focus on 100% syllabus, and you have to cover the 100% syllabus. So today is day 4. We will try to cover ratios, inshallah, today, and we will try to cover the earnings per share EPS topic because most of the students uh, wanted me to do EPS today. So that's why I have selected EPS topic. And finally, uh, for the cash flow topic, I have already told in the last session that I will share the video of the cash flow on on my WhatsApp group. So all of you are required to just join the WhatsApp group so that I can give you the cash flow related video on the group. How please help how to define the limited practice. Okay, limited type practice means like I'm giving you 5 questions. I have already given you 5 questions for the final account. So do till the exam date only 5 questions of the final account and do repeatedly. You're not required to prepare income statement balance sheet all the time, but you have to practice the question, at least solve at least 1 or 2 questions and do the adjustments at least for five questions which I have recommended to you. Then just review the exam kit. If you see a particular uh, adjustment in the final account question that you have not yet attempted, so do attempt at least 1 or 2 adjustment from that question. But till the exam date, you have to do only 5 questions which I am recommending you. I've recommended you in the final accounts. Similarly, you have to do only 4 to 5 selected consolidation questions, and you have to do 2 or 3 cash flow questions, and you have to do at least 3 to 4 consolidated related questions. So this is the meaning of limited practice, and you have to do uh, you have to do a lot of MCQs and OTQs, but the question should be relevant. Relevant means focus on the past papers and Kaplan and BPP exam kit. Do not try to solve irrelevant questions. You can find different websites in which way you will find MCQs on different IFRSs, but these are not relevant for you. So the relevant portion is you can found in Kaplan and BPP kit. I think it has sufficient questions to do the practice for section A and B, and some questions are available in the past papers. Okay, how to select? Okay, please do mail me so that it will be helpful for the cash flow. is defined for practice. Uh, I do not recommend any platform to do the practice because the quality of the question is very important. So it might be possible that some different platforms can uh, disturb your concepts. So I think go for the content which is registered with the ACCA. So that is my recommendation. So let's start the today's slide. That is the format of the exam. This is the passing ratio. This slide is very important for all of you, that uh, you have to focus on the key concepts, and do not take this paper as taken for granted, because the passing ratio is just 51%. So I missed your initial 10 minutes of yesterday's session. Can you please tell me if you discussed anything about the cash flow statement? I didn't discuss till date anything about the cash flow. I have just discussed this uh, point in the last session, that I will share the cash flow related video on the WhatsApp group. So all of you are required to join the group, and I will share the video of 3 hours. And inshallah, after that video, you all will be 100% perfect in the cash flow. So let's start with today's presentation slides. Today we have to cover the major topic that we have to cover is the ratios. So let's start from the first. So disposal of subsidiary is a topic that was left in the last session. So I'm going to start from the topic, disposal of subsidiary. So first of all, I have to check. I have to select the color. Okay. How important the statement of cash flows topic is for the exam? I think the importance of the cash flow for question section C is least importance. I think the most important topic is ratios, then consolidation, and final accounts. So I don't think so. Good examiner is going to ask cash flow question, but you have to prepare yourself for the 100% course. So let's start from the disposal of subsidiary. When the parent company has sold its shares in the subsidiary company, so there are some cases in which the parent company has lost its control, and there are some situations in which the parent company has not lost the control, but its percentage has decreased significantly. Like if I've got 90% shares, and after the disposal of my shares, I have now 70% shares. So the subsidiary is still subsidiary, but my shares or stake in the subsidiary has reduced. So we have to calculate, and the detailed discussion of this disposal topic is actually related to SBR paper. So you don't need to worry about the disposal cases. So the most important thing is how to calculate the gain or loss on disposal. So actually there are two types of gain. One from the group's perspective, and the second one is in the books of parent company. So the parent company's gain can be calculated by comparing the cash received with the investment sold. So this difference will be the gain on the disposal to the parent company. Like suppose we have investment in shares with a value of 500,000, and we have sold this at the current value, which is 600,000. So there will be a gain on the disposal to the parent company is 100,000. So examiner can ask you the question that calculate the gain in the books of parent company, or it could be the calculate the gain from the group's perspective. But practically speaking, this gain of the parent company is only calculated for the purpose of taxation. So this information is not relevant to you, but it's a practical knowledge. Now, from the group's perspective, so you have to first write the fair value of the cash received, and sometimes company has sold some of its shares, parent company has sold some of its shares and retained some of the shares. So the fair value of the investment retained. So if the investment is still held after disposal in the subsidiary, then it should be measured at its fair value. So cash received plus fair value of the investment is retained less. So this portion will be deducted. Now you have to calculate the net assets of subsidiary at disposal. So what is the value? What is the total value of subsidiary at the time of disposal? Plus we have to calculate some unimpaired goodwill in it. And finally, the NCI figure should be deducted from here. So this final answer should be deducted from here, and we got the gain on disposal. Can you calculate the gain or loss on associate? Gain or loss on associate, yes, we can also calculate the gain or loss on the disposal of the associate company, but this is not covered in the scope of F7. How about the retained earnings if restated? You have to take the retained earnings up to the date of disposal. Like when we are calculating the net assets, you have to take share capital plus reserves. So retained earnings is also the part of reserves. So all the reserves should be up to the date of disposal. So we have to add these two values, we get the value of net assets. So by adding net assets at the disposal plus unimpaired goodwill, means the goodwill which is left over after the impairment loss, and finally we have to deduct the value of the total NCI. So this should be the final amount which should be deducted from the consideration that we have received. So the difference will be the gain or loss on disposal. So if you have any question, please do ask immediately. So we have received some questions. Okay, the first one is how about the return earnings if okay, if stated. Uh, where will this gain be reported? Yes, this question is very important. This gain will be shown in the income statement, or if it is a balance sheet question, it should be added in the consolidated retained earnings. So when you are preparing income statement, you have to add this gain on the disposal in the income statement uh, before the in the profits before tax. And if you are doing a balance sheet question, it should be added in the retained earnings. Okay. The second question is, can we directly add NCI above? Yes, you can add the ensaver, but I think it's good for you if you just follow the formula. The fair value of the investment retained is the retained earnings. No, the fair value of the investment retained means the investment which the parent company still has after the disposal. This value of the investment and the current value of this investment is called the fair value of the investment retained. It's not retained earnings. This gain or loss go to the OCI? No. How to calculate the net assets? Net assets is calculated by adding the share capital of the subsidiary plus its all reserves till the date of acquisition, disposal. Net assets of the subsidiary is equal to share capital plus retained earnings? No, share capital plus reserves. So the reserves means share premium, revaluation reserve, retained earnings, and other reserves. Is there a goodwill on the associate? No, there is no goodwill on the associate. When the retained earnings, it's retained earnings or reserves. I have discussed this. Suppose the parent sold its significant investment in subsidiary, but there is a fair control power still. It will be considered disposal of the subsidiary. No, actually, you have asked a question relating to SBR. It is actually the equity adjustment. So technically, it's not disposal because we have still control the subsidiary, and but it is not a part of F7. So let's start the topic EPS. The disposal is only about the formula. So we have 3 to 4 questions exam kit. So you can easily attempt the questions by just memorizing the formula. What if the subsidiary becomes a dispose and associate after the disposal? This question is again related to SBR. So I don't want it to reply this question because there is a new Pandora box related to this question. So let's start the EPS topic. EPS means earnings per share. Earnings means profit attributable to ordinary shareholders. And the profit attributable to ordinary shareholder means profit after tax minus preference dividend. So after deducting the preference dividend, the whole of the profit which is left over will be the profit for the ordinary shareholder actually. So this portion of the excess profit is technically called earnings. And the formula for the EPS is earnings per share. So you have to take ordinary shares. So if the EPS of the company is 5, for suppose if the EPS of the company is 5 or the EPS of the company is 3. So which company is better for the investment purpose? So from the earnings point of view, you can say that this company is earning more as compared to this company. So there are some issues that is the reason that ISB has built a complete standard on this particular ratio, because we have studied more than 20 ratios in the syllabus, but there is only one ratio in which there is a complete accounting standard, that is IAS 33. So it is actually a very important standard. So the formula for the EPS is profit after tax minus preference dividend minus NCI in case if uh, there is a profit, or we are going to calculate the EPS of a group, or you can say that we are calculating the EPS in a consolidated financial statement. So the formula will be this. For a single company, the formula is simply profit after tax minus preference dividend divided by weighted average ordinary shares. Weighted average ordinary shares means you have to take proportionate shares. Okay. So let's move on towards the first question. So this is the part, and all of you are required to calculate the EPS. Oh, it's already calculated here. Earnings per share. The issued capital of the Savior, a public limited company, at 31st March 2003 was 10 million, and its shares are denominated at 25 cents each. Savior's earning attributable to its ordinary shareholder for 31st March were also 10 million. So the profit or earnings is 10 million. So what should be the value of the denominator? What should be the value of the denominator which gives the EPS of 25 cents? Yes, it should be 40 million. So this is how we have calculated the EPS of 25 cents. $0.25 or 25 cents. Okay. So we are here at 31st March 2004. Then on 1st October, Xavier made a right issue of shares of two new ordinary shares at a price of 1 each for every 5 ordinary shares held. The offer was fully subscribed. The market price of the ordinary shares immediately prior to the offer was 2.4 each. Earnings attributable to the shareholders for the year ended 31st March 2005 were 19,500. So ignoring these three zeros, examiner has already calculated us and given the value of earnings to us, that is 19,500. All of you are required to just calculate the weighted average shares or the denominator for this portion. Okay, how did we get 40? The question is from the student that how did we get 40? 40 million is being calculated here as there are $10 million. So number of shares is calculated. It's a very simple question by dividing with the par value. So the par value of each share is mentioned here, that is 25 cents each. We got the value of 40 million shares. How to calculate the weighted average? Are we not computing the adjusted factor before getting at the weighted average? So you have to calculate the EPS. I'm giving you 1 minute. After 1 minute, I will start the question. 3.9. Okay. The A rate of the company is 31st March 20x5. So the start will be 1st April 20x4. And assuming at the start of the year we have 40 million shares. On 1st October 2004, Xavier made a ride. So first of all, you have to calculate the date after which the company has issued the ride. So on 1st April, no. 1st May, April, May, June, July, August, September. So actually after the 6 months, company has issued the ride on 1st October. Issued a right of two new shares for every 5 shares held. So the two new shares were issued at a discounted price of 1, but the market price of each share is 2.4. So the price of 2 shares is 2, and the price of 5 shares at 2.4 will be 12. So we have received 7 shares at a value of 14. So the average value of each share is 2. So the technical name of this average value is theoretical X right price. Theoretical X right price is called TERP. And then we have to calculate the bonus adjustment factor. So the bonus adjustment factor is the market value, which is 2.4 divided by 2. We got the value of 2.4 divided by 2. We got the value of 1.2 for bonus adjustment factor. So for the first 6 months, if we have got 40 million shares into 6 months into bonus adjustment factor of 1.2, then for the last 6 months, we'll be having how much shares? So actually company has issued for every 5 shares, company has issued 2 right shares. So divide by 5, multiply by 2, it will be 56,000 for the last 6 months. So multiplying these two values, we got the EPS for 2005. That is 19,500 divided by whatever with the value. So I think I have to calculate the amount. So 40,000 divided by 2, 40,000 multiplied by 6 divided by 12 multiplied by 1.2. So it will be 24,000 plus 56,000 into divided by 2, 28,000. So 19,500 divided by 48, it will be 52,000. So the EPS should be 37.5 cents. Where did 40 million comes? 40 million is actually we have taken from the previous data, that is we have calculated here. So this is the point from where we got the value of 40 million. What happens to the previous share price? Actually, when the company has issued the right shares, and right shares will cost uh, comparatively less to the shareholders, so all the shareholders try to sell these shares at a for the purpose of profits. So that is the reason that when all the sellers comes in the market, there will be a slight decline in the market. So this value is calculated. You can calculate the average value. So we can say that when all the shareholders having the right come in the market and sell the price, then the average price of each share will be approximately 2. How will we find the bonus issue or right issue? Yes, it's mentioned here that the company issued right shares. So you have to do the working of right shares only. Okay, is that clear? Next is the issue of the bonus shares. If assuming company has 40 million shares at 1st April 2003, and it's wrong totally. Company has 40 million shares in 1st April 2003, and the year end is 31st March 2004. Now this is the case of bonus issue. You can see here on the screen, then this is the case of bonus issue. Okay. And from 1st April to 31st March, the company has earned the profit of 13,800. So 13,800 is the earnings portion, and company has issued on 1st July, April, May, June. So after 3 months, company has issued 8 million further shares. 8 million means 8,000 shares at full market price. Full market price means it's a simple case in which you are not required to do any sort of adjustments. On 1st January 2004, a bonus issue of one ordinary share for every 4 shares held was made. So whenever you see a bonus, you have to calculate the bonus return factor. which is calculated at 1 plus 1 is the constant, and 1 plus 1 new share for every 4 means 1 upon 4. So the bonus hidden factor is 1.25. So whatever be the date of the bonus hidden factor will should be applied on all the shares. So we have 40 million shares at the start till the end of the year. So we have to simply multiply it with the bonus hidden factor, that is 1.25. And we have 8,000 shares issued on 1st January and the year end is 31st March. Then it means this shares was held only for January, February and March, 3 months. So it should be multiplied with 3 months, 3 by 12. Should be somewhere here at this stage. Sorry, it's not 3 months. 80,000 shares were issued on 1st July. July, August, September, October, November, December, January, February, March. It should be 9 months. 9 upon 12 multiplied by bonus hidden factor of 1.25. So these are the calculations. I'm repeating here, 40,000 into 1.25 plus 8,000 shares. First, we have to take the proportionate share into 1.25. So this should be the denominator. The EPS will be, and the EPS will be, please calculate the EPS. 13,800 divided by 40,000 into 1.25 and 8,000 into 9 upon 12. So any one of you can help me to give the answer. Yes, the EPS is 24 cents. So I'm here for further 1 or 2 minutes. You have any issue, if you have any problem in bonus shares or right shares, you can ask it freely. So the bonus shares and the right shares, I have explained both the bonus and the right shares. So if you wanted to discuss anything, you can ask it immediately. Any question? Any question for the bonus or right shares? I'm lost. Can you please repeat the right shares? Okay, I will repeat the right shares first. If you have any question in the bonus shares, why does X right price, X right share value mean? First, please ask the question relating to bonus, then we'll discuss the right shares. Why we haven't calculated the bonus shares and then added in weighted average shares? Yes, you can do it. That's not the problem, but the most easiest way is to solve the bonus case is here, you can see on the screen. There could be multiple ways to calculate the amount of weighted average shares, but I'm telling you the shortest way to calculate the. Any question relating to bonus? Okay, I'm going back towards the right shares. If you have any question about the right shares, Why not 80,000 minus 40,000? 40,000 and 80,000 are totally different shares. And in fact, it's not 80,000, it's 8,000 shares. Secondly, they both have a different time period. Therefore, we have to take 9 upon 12 on 80,000 only and the 8,000 only. And the 40,000 will be considered 100% full amount. Therefore, we have multiplied 8,000 into 9 upon 12 into BF and 40,000 directly BF without proportionate. Can you repeat the bonus one again? Bonus one again. If it is very difficult to repeat the whole concept again, but you can ask if you have any problem, or you can view my video after the session. If the right issue of the shares in the middle of the year, hence we time proportion the issue. No, it's all about whenever we have issued the right shares, it should be proportionated. Like sometime it could be 6 months, 6 months, it could be 9 months, 3 months, it could be 5 months and 7 months. What does X right share value mean? Theoretical X right price is actually the average value which we are assuming after the issue of right shares. Any other question? How 56,000 comes from? We have calculated. Actually, what we have done is we have break the shares in two parts. So we have calculated the number of shares for the first 6 months initially by multiplying 40,000 into 6 upon 12 into 1.2. Now, company has actually issued right shares of 2 for every 5 held. So 40,000 into 2 upon 5 will be 16,000. So we have added these two values. So 40,000 plus 16,000. So in the last 6 months, we have 40,000 previous shares and 16,000 new right shares. So this is how we have calculated 56,000 for the last 6 months. How to calculate TERP? We have calculated TERP through the information given to us that company has issued 2 right shares for every shareholder who has got previously 5 shares. So if I have got 5 shares at a market value of 2.4, so in the value of 12, we have 5 shares. But because of this 5 shares, we are going to receive 2 new right shares at a value of just 1 rupees. So it will cost us only 2 rupees. So we have paid actually 14 rupees and we received the shares with a quantity of 7. So the average value will be 14 divided by 7. So the 2 is the average price of each share. What about 4,000? Where is 4,000? There is no 4,000. Explain the concept of theoretical exercise price fair value per share means why we need to calculate it. We have to calculate it because of the fact that shares will be trading in the market after the right issue at this price approximately. Why we didn't multiply 56,000 to 6 upon 12 with the BF? BF is actually given to the shares. BF, yes, BF is already given to the shares which were before the right issue. So 40,000 is actually the reason that we have received the right shares. So the bonus component should be related to these shares rather than 56,000. How to calculate 24,000? There is no 24,000 here. Okay, 24,000. 24,000 is here. 40,000 is 6 upon 12 to 1.2. Okay, the next important thing that you should know is that if in a current year, that is 2003 and 2004, company has issued and calculated the basic EPS, and the answer for the basic EPS is 11, and the previous year's EPS is 11.5. So according to IS 33, you cannot compare these two EPSs if the company has issued bonus shares or right shares in the current year. So all you need to do is to restate the last year's EPS. How we can restate the last year's EPS? You have to divide the previous year's EPS with the bonus adjustment factor. So the bonus adjustment factor could be for the bonus shares or it could be for the right shares. If the company has issued both, so you have to divide 115 by both so that you can calculate the comparable EPS for the previous year with the current year. Can you calculate why do we calculate the theoretical X-right price share? There are a number of students who wanted to know why we are calculating X-right share price. Actually, X-right price is calculated because we have to calculate the bonus impact. So previously the value of each share is 2.4, and after the right issue the value will become 2. So there will be a right impact of 2.4. So this is the reason, because the bonus adjustment factor in the right shares should be calculated by dividing the market value and average value. Okay. Now, another concept of EPS is the diluted EPS. The formula is same, but you have to add two new things. The first one is the notional savings. The second one is notional shares. So when we add notional savings in the numerator and notional shares in the denominator, we got the value of diluted EPS. So diluted EPS means we are calculating the EPS on the assumption that when the potential ordinary shares will be converted into ordinary shares in the future, what will be the possible negative impact on the EPS. So being the financial reporting expert or financial accountant, you should know this, that EPS is calculated for the purpose of investment or for the benefit of the shareholders. So when we calculate the EPS, you have to tell the shareholder there are two possibilities, that the EPS could be on the basic level. It could be, for example, 3 or 4. But if the company dilutes the EPS, it could be 1 or 2 or 3, whatever be the answer. So EPS dilutes actually because of some factors. So we are going to calculate the expected diluted EPS. Notional savings can be calculated as interest into 1 minus tax rate. And notional shares could be calculated as maximum number of shares. Maximum number of shares means if the company has given you the option to convert your shares into 100 or 200, so the diluted EPS will be maximum diluted at 200. So you have to calculate the diluted EPS at 200. So all of you are required to calculate the diluted EPS in this scenario, ignoring this portion. Ignoring this portion, calculate the diluted EPS. Okay, let's start. First of all, we have to calculate the basic EPS. On 1st April 2005, Xavier issued 2 million convertible loan stock, the terms of the conversion, and blah blah blah. This information is irrelevant for us. Alternatively, the loan stock will be redeemed at par for the cash. Also, on 1st April 2005, Ryder Xavier were awarded the share options of 12 million ordinary shares. Options for ordinary shares from 1st April 2004 at 1.5 per share. The average market value of each share is 2.5. Income tax is 25, and profit attributable is 25200. The total number of shares is assuming. Do we have the shares in this question? Mm, I think we do not have been given the shares. I'm giving you the information. If it is 40,000, the basic EPS will be 25,200 divided by 40,000. 0.63. Okay. Now you have been given diluted EPS. So if I'm going to give to solve with the convertible loan only. So for convertible loan, the numerator will remain the same, the denominator will remain the same, but you have to add two things. The first thing in, when the 20,000 loan note will be converted, its interest of 8% will be saved. So 8% of 20,000 will be 1600. The tax impact will be 25%, so 1 minus 0.25. So 75% of 1600 will be 1200. So actually 1200 will be saved when the company has issued, when the company has converted the convertible loan. So we are assuming that the company has converted the convertible loan at the start of the year. Then what will be the savings? The savings will be 100 into 50. So 20,000 divided by 100 multiplied by 50. So this information is only relevant for the calculation of the shares, but do not assume that the company have to convert before in doing the basic EPS. So it is only used for the diluted EPS purpose, and it is an assumed calculation. That's why we have to say it's a notional shares. So the notional shares will be 10,000. So you can see here that you can find the diluted EPS. Can you calculate it, please? It's 0.528. So the EPS has now diluted from 0.63 to 0.528. So this is how we have calculated the diluted EPS with the basic EPS. Now I'm going to incorporate any question. So where we calculate 1600. 1600 is calculated as 20,000 into 5%, 8%. 20,000 into 8% is the interest of this convertible loan. Even you can see from this point initial, and where we calculate 1,000, 10,000. 10,000 is calculated here. 20 million loan notes, and each loan note can be converted into 500 shares, 50 shares. Now the basic EPS assuming is 25,200 divided by 40,000. The basic EPS is 0.63. Now if the examiner has given you the share options, so you will get share options. So the notional savings for the share options will be 0, and notional shares will be total shares, free shares, sorry, free shares. Then how to calculate the free shares? So in calculating the diluted EPS, you should know this: 25,200 will remain the same, plus notional savings is nil, and in the denominator there must be a free shares. Now how we calculate the free shares? The director of the Savior awarded shares options to 12 million shareholders shares exercisable from 1st April at a value of 1.5. So in a payment of 1.5, 1.5 into 12 means in a payment of $18 million, you will receive a 12 million shares, and the market value of each share is the market value of each share is I think 2.5. Yes, 2.5. So if I go with the 18 million and purchase the share at the market value at 2.5, we got the value of 7,200. So 12,000 is the value of the share that I have received, and at market value I should receive 7,200. So there are certain shares which is free for the company. So the amount will be 4,800. So this is how we have calculated the diluted EPS scenario. So now you have a question for the answer purpose. I'm giving you as 1 minute to solve it, please. Yes, it's C, all four. Oh my god. There are some students who I think didn't understand and read the question carefully. You can see here that I have the question says that which of the following items needs to be additionally considered when the aqua's diluted EPS. Your brain should stop here for the year. So students who are giving option B or all four or D should reconsider, or B or A should reconsider their options. And it is again an exam tip for you that whenever you got the answer very immediately, just be skeptical and try to read the question again and try to solve the question again so that there should be no silly mistake. So the right answer is C. Next question for all of you. Can you hear me? Can you people hear me? Yes. The comparative EPS is restated, where the change in accounting policies affects the previous year's profit. So when the previous year's profit is restated, then EPS is also restated. So what is the right answer? Okay, the right answer for this, can you hear me, boys? Yes, it's B actually. Actually, I'm having a very strong fever today. That's why I'm a bit. Okay. Many competitors believe that the trends in the earnings per share is more reliable indicator of underlying performance than the trend of the net profit for the year. Which of the following statements support this view? Basically, it is saying that there are some commentators who believe that the earnings per share trends are more reliable than the profits, because if the profits is increasing over the period, then it could be because of new investments, and new investments means more shareholders. So you can see that the business is actually growing. You can see that the business is growing, but there are a number of shareholders. The shareholders are increasing day by day. So your profit component will remains approximately same. But when you are calculating the EPS over the period, you'll see if there is a growth in the profits as well as a growth in the shareholder, the EPS will remain the same. So it will tell you the better information in comparison with the profitability, because EPS considers the numerator, that is the profits, and it also considers the denominator, that is the number of shares. So if the profit is increasing and the number of shares is also increasing, so approximately the EPS will remain the same. So apparently you can see that the profit is growing day by day, but it's not. Okay. So this is actually the reason that B is the right answer. Okay. There are questions. Why not D? The comparative EPS is restated where a change in accounting policy affects the previous year's profit. Actually, when there is a change in accounting policy as per the requirements of IS 8, there will be a change in the profits as well. Because IS 8 says that when you are going to change the accounting policy, it should be adjusted retrospectively. So in retrospective adjustment, we have to adjust the retained earnings opening balance and we have to restate the previous year's profit. So if you are doing the comparative EPS updated with the updation in the profits, so there will be no difference between so the basically actually you have to give your answer in support with this particular scenario, like EPS is more reliable than the profitability. So I think we should have to move forward. Yes, ratios. So please tell me whenever you want the break, please tell me so that I will give you the break, but right now I think we have to start the ratios topic. Ratio is one of the most important candidate for section C. You should know the basic please comparative figure. Comparative figure means last year's income statement balance sheet. So previous year's financial statements is called comparative figures. So it is the requirement of IS1 that whenever you prepare a financial statements of 2018, like, you have to show the results of the last year. Okay, let's start the topic ratios. Ratios is one of the important candidate for section C. So you can expect a 20 marks question from the ratios. Like in the past 2 to 3 attempts, you can see that there is a continuous question of ratios. So you should know the interpretation. So first take the examiner's feedback. Why students get low marks in the ratios? The examiner's feedback said when marking this style of the question, there are some common weaknesses that are identified, some of which are highlighted below. Limited knowledge of the ratios calculation. So this is the part that you should have to do by yourself. At least try to write 4 to 5 formulas of the ratios on a daily basis. Like you should know, uh, like what is gross profit. If someone asks you randomly what is the formula of gross profit and ROC, your answer should not be that I have not yet revised the topic. So you should know what is the formula of ROC, what is the formula of asset turnover, what is the formula of gearing. So, so there are a number of students who have a limited knowledge of the calculation. Appraisals not linked to the scenario. Like there are a number of students who just go and uh, try to memorize all the possibilities and write all the possibilities in the examination. So there is no need to write all the possibilities in the examination. So your answer should be linked to the scenario. Poor understanding of the topic. So you will be perfect inshallah after this slide. Limited understanding of what the accounting information represents. Lack of commercial awareness. Like you should know what is the meaning of slow moving stock, what is the impact of high tech industry, perishable items. So these are basic knowledge of the business. Discursive element often not attempted. Mostly if the question is comprises of 8 and 12 marks. So 12 marks for the interpretation and 8 marks for the calculation. So actually this calculation was performed for the purpose of interpretation. So mostly students just attempt the 8 portion marks and left this portion. So do remember this, that you will get 0 marks uh, if you leave the interpretation area. Inability to come to the conclusion. There are some students who move around a single point all the time, and there is no solid conclusion. Poor handwriting, like you can see on the screen, this is called poor handwriting. But the ACCA tutor is now uh, very much, it might be very much happy because all you need to do is to type it. So whatever your handwriting will not be reflected in your examination from now. Poor English. Poor English means if the gross profit ratio of the business has increased from 10% to 10.2%, and the students' comments are there is a drastic improvement in the profitability of the company. The gross profit ratio has increased tremendously. The gross profit ratio has deteriorated significantly. So these are the reasons that the students poor English does not mean that you should be 100% accurate because it's not an English paper. So you can write anything, but your answer should be reasonable. So in a reasonable English, your answer should be written. So there is no need to worry about the if you lacks in the writing skill. Your technical knowledge is more important for this paper. Now, what are the most important points that you should have to understand when you are attempting the ratios question? The first thing that you should know is that examiner wants you to deeply read the question first, so that when you are writing your answers you should know that where what are the areas that you should have to cover. Now what is the meaning of deeply read the question? Like you should have to identify the hints and its impacts. So in all the questions, examiner will give you one or two hints. So you have to identify this hint and you have to incorporate that hint in your answer. And finally, your answer should be fact with reason. Like if I am just writing the gross profit ratio has increased from 10% to 12%, so it's just a statement of fact. So you should know the reason of the increase in the gross profit. Okay? And you should incorporate the hint in all your answers. But you should know that that hint affects which ratios. Suppose if the gross profit is affected by the hint, then you have to calculate the gross profit with that hint and without that hint. Okay? Suppose if the gross profit of the business is 100 divided by 500 sales. So 1 upon 5 will be 20%. So the question is the hint is clearly available? So I think yes, it's clearly available. Okay. So if the question or in the scenario and in notes, it is mentioned that there is a loss which is related to the cost of goods sold have not yet been charged with a value of 20 in the income statement. So this is the hint that the cost of goods sold figure is not yet updated. So when we update the cost of goods sold, the profit will be reduced to 80. So the profit with the hint, incorporating the hint, which should be more reduced. So you have to comment on this profit as well as on this profit. That without loss, this profit is here, and after incorporating this loss, this profit is here. So let's start the question first, then we will discuss some other aspects of the ratios. Keep this. Now let's start with the questions. It's in the handout section. If we select September December exam of the past paper, so here we have got the past paper. Now I'm just telling you how to identify the hint from the scenario. So first of all, read the requirement. Calculate the non-controlling interest in the retained earnings included in the consolidated financial statement. So this portion is actually related to consolidation. Based on your answer in A and the financial statements provided, calculate the ratios for the year ended 30th June 2007 and 2008. So this is the portion that you are required to only calculate to three ratios. You are only required to calculate three ratios of 2007 and 2008. This will give you 4 marks. But these 4 marks should be gained in maximum 6 minutes. You should not invest too much time on this portion. Then finally, using the information provided, the ratios calculated above, comment on the comparative performance and the position of the 2 years. So whatever ratios you have calculated, you are only required to comment on these three ratios, not more than that. But you didn't find any hint up till now. Now, your answer should specifically comment on the impact of the acquisition. Now, the examiner is so kind to the student that he has already mentioned you that there is you should incorporate the impact of the acquisition of Smooth Company. So this is actually the hint for this question. So let's start the question. Duke Company is a retailer. Duke Company is a retailer. Now you should point out this point. You should know this point. Means the company is a retailer. So company is not a manufacturing company. So there is no need to tell about the raw material. There is no need to discuss about the raw material, WIP, and something like that. So if you are a retailer, then the comment should be on the finished goods rather than raw material and WIP. With stores in numerous cities, on 1st January 2008, Duke acquired 80%. So that this date is very important. In January 2008, Duke acquired 80% share capital of Smooth Company. So as we all know, in the consolidation, we just add the results of parent and subsidiary in the consolidated financial statements. So for the previous year, Duke was alone in 2007. And for this year, Duke is converted into a group of companies. So actually in 2008, we have been given the results of two companies. The one is Duke and the second one is a Smooth Company. Now, the most important issue is now you cannot compare a single company result with a group of companies results. But if the examiner is telling you to do the interpretation, so your answer should incorporate this hint. And this hint is whenever you are doing the calculation and comparison, your first comment should be whatever you are seeing here, like the profit from the operations has increased over the period. Firstly, then you should discuss this that this profit is increased because of the acquisition of the Smooth. So whatever the impact of the Smooth should be first deducted, and then you can comment on the Duke's performance specifically. But the question is clearly saying you that you have to show the impact of the acquisition only. So you are only have to show the impact. So actually all the results of 2008 will be overstated because of the acquisition of Smooth. A service company specializing in training and equipment. So the company is actually giving training and equipment services. So there is no concept of cost of goods sold and inventory and something like this. This was first time Duke a company acquired a subsidiary. Okay, the consideration for the smooth consists of cash element and issue of the shares in due. So there will be a shortage. There must be a shortage in the due company from the previous year because they have acquired a subsidiary. So the cash balance should be substantially reduced. So there is no cash balance here, but definitely if I have purchased the company, the cash balance should be substantially reduced. The issue of the shares in the due, the, the issue of shares in the due company's uh, shares has been increased because of the acquisition. So it means the denominator of some ratios will be increased. Duke has begun to consolidate smooth into the financial statement, but it has yet to calculate the non-controlling interest and NCI retained earnings. So all of you are required to calculate retained earnings and NCI. We have already studied this. Now, the fair value of the non-controlling interest in Smith at 1st June 2003 was deemed to be 3.4, and the retained earnings in its individual financial statement are 13.2. Smoot made a profit for the year to 30th June 2008 of 7 million. And the professional fee is given to you, and these are all adjustments actually through which you have to calculate NCI and retained earnings. But the most important hint for this part of the question is the company is a is working in a service industry. Company is a retailer, and company uh, works in different industries, in different cities and cities, and working in with stores in numerous city centers. Okay, different city centers, and the most important thing is the results of 2008 all will be overstated. So this is the point. So when I close this session, so all of you are requested that based on the information that I will provide today, all of you are required to just calculate these ratios and try to attempt it at home and just reconcile your answer with the examiner's answer. You will feel that the ratio topic is very easy if you incorporate the hints and write your answers in a reasonable language. Now, again, I'm giving you a question. Is it March, June paper? No. Yes. Again, a similar type of question was asked in March and June. You can see here that previously there is only one company, individual company. Now it's a consolidated period. So the sales has increased over the period, cost of sales has increased. But you do remember this point whenever we are working on consolidated financial statement, the key thing is we eliminate all type of intercompany transactions. So this point should be mentioned in the comments that company has ignored all the intercompany transactions. Means company has removed all the sales and cost of goods sold. Company has removed all the unrealized profits, and company has done the revaluation of all the assets at the time of acquisition. So there might be the impact of excess depreciation. So all the adjustments related to consolidation should be discussed. So again, there is a hint, and the hint is company has acquired another company. Again, the examiner, you can see the examiner wants you to calculate the gain on disposal with the formula that we have discussed in slide 1. Remove the dissolved Swans company and gain on disposal of subsidy to prepare the revised statement. So this is again halfly related to the consolidation, and you are only required to calculate equivalent ratios. So this is very important point that you can see here that in current attempts, the examiner is least likely in the calculation. So examiner is least interested in the calculation. Calculate the equivalent ratios of those of the Perkins company based on the revised figures in B. Using the calculated ratios calculated in part B, part C, those provided questions, comment on the performance of the Perkins. So hardly the comment will be based on 1.5 page. So after solving, you are not allowed to read the answers of these two questions unless you solve it by it yourself. So when you solve these questions, you will find that this is actually very easy to answer. You only have to adjust and work according to the hint. So I think we should have to take one more past paper. I think can for past papers. So these are the past papers I've discussed about. Yes, here is another question for you. Now in this question you can see here that the examiner wants you to calculate some ratios, that is operating profit margins, return on capital employed, asset turnover, current ratio, interest cover, gearing. And the calculation marks is 6. And comment on the performance of and the position of Movie company for their ended. Your answer should highlight an issue movers should consider in the near future. So this is the hint that you should have to consider. Now, what is Moyer company? Moyer is an international airline. So you should know the basics of the airline company, that how the airline company works, and I think everybody knows about the airline, which fly to the destinations all over the world. So you should know the basics of airline, that airline company should have to purchase very expensive non-current asset, that is the aircrafts. They incurred they incurred a lot of expenses to maintain the aircraft. They have to hire very professional management, and they charge so much amount for the airfares. They incur expenditures to improve the interior cabin facilities and all. So these are the basic knowledge of the airline. Movier experienced a strong initial growth. So this is again a very important point. But in recent periods, the company has criticized by underinvesting in its non-current assets. So company is not actually investing in non-current assets. So now the property, plant and equipment of the assets has almost doubled, and the intangible assets of the company has increased. Inventory, receivables, cash is substantially reduced, but still the company has got the cash. Equity shares means the company has not yet issued any further shares. Retained earnings has grown, but the company has done the revaluation actually. Now this is a very important point, that whenever you do the revaluation, there will be a overstated capital employed amount. So there will be an overstatement in the capital employed, which leads to understatement in number of ratios. So when you are comparing these two results, you will find might be the return on capital employed of the company has decreased significantly. But the reason is actually the revaluation. The liability, overall liability of the company has decreased, means the company has repaid its loan, which is good for the company, but the interest rate is 6%. Trade payables has increased, almost doubled. Now the liability is now shown in the current liability. Actually, company has not paid the amount. No, company is going to pay the amount in installments actually. So normally, airline companies are paying the installments of the aircraft because the aircraft are very expensive. So they paid the installments of the aircraft. 2006, 2007 revenue, profit from operations, and these are the results. So you can see here that there is a decline in the profit over the period. There is a decline in the revenue. There is a decline in the profit from the operations. So when the revenue of the airline company decreases, so it could be the reason that the demand of the aircraft is airline is decreasing in the market, or it might be the company has reduced its airfare in order to capture the market share, but you cannot see the significant growth in the revenue. So there are a number of reasons on the basis of which the company can there are a number of reasons that you can say for the reason of decline in the revenue, profit from the operations, and okay, Movier had exactly the same flight schedule. So this is how I want all of you to please do the examination of the question completely before writing anything about the question. Movier had exactly the same flight schedule in 2006 and 7. So company has got the same flight schedule. Means it might be possible that number of passengers has reduced. Like previously we are going to London, now we are going to London, but the capacity has reduced. That's why the revenue and the profitability has declined. This could be the reason. With an overall number of flights and the destinations being the same for both years. So it might be the reason that company has uh, reduced the price in order to maintain its existing structure, existing market share, or the capacity has reduced. The occupancy of the airline has reduced substantially. In April 2007, Movier had renegotiated its license with the 5 years, five major airports. So now this is the important point. The company has renegotiated its license with five major airports. That's the reason of increasing the intangible assets, which led to an increase in the prices Movier had to pay for the right to operate flight there. So this is again one of the reason that the company has to increase its price because its cost has increased, so it has to increase the prices. So whenever the company increase the prices, the overall revenue might go down. So this could be the reason. The license with 10 more major airports are due to expire in December 2007, but there are 10 more airports which are going to be expired. More is currently negotiating with these airports. So this is again a major concern for the company. So these are the basic issues that you should have to consider. So whenever you are reading the scenario, just create a basic bullet point of the basic hints that you are uh, getting from the scenario, so that whenever you're writing your answer, you should have to incorporate these points, like company is going to negotiate five new airports, and that is the reason, and that is the reason. So you have to write. Now, mostly students ask that what should I have to write, and when I am going to attempt the question, what should I have to write? What should be the basic knowledge I should have when I am attempting the ratios question? So the problem is solved here with this slide. For ROC, if the ROC of the business is going to improve or it's going down, you have to keep these points in your mind. This ratio is generally considered to be the primary profitability ratio, as how well the business is generating its profit. So this should be the point that you should have to write whenever there is an increase in the ROC, or it might be the reduce, so it should be with the opposite wording. The business is not being able to generate profits from its long-term financing. Okay, an increase in ROC is generally considered to be an improvement, but it could be a manipulated figure because when we do the revaluation, this portion has increased significantly, or there are some factors on the basis of which the debt component has increased, but there will be no significant change in the profitability. Then the ROC of the business goes down. Movement in the ROC, return capital employed, are best interpreted by the examining profit margin. This is again a very important point. So actually, examiner wants you to give the fact with the reason why the ratio is improving or not. So basically, the reason of increasing the ROC is actually the profit margins or asset turnover. So whenever there is an increase or decrease in ROC, you have to give the responsibility towards the asset turnover or the profit margins. Now, asset turnover, the formula is here: revenue upon total assets less current liability, or it could be a capital employed. Asset turnover shows how efficiently management level are utilizing the assets. So this is again a very important point to generate the revenue. There are many factors that could be both improve the or improve or deteriorated the asset turnover. So this is again an important point. For example, a significant increase in the sales revenue. Now again a very important point. Significant increase in the sales revenue may contribute in the asset turnover. So if there is a significant increase in sales revenue, which could be uh, due to decrease in the price, or it could be a decrease in the demand in the market. If the business entered into sale and operating lease, means company is going to rent its properties, then the assets base would be become smaller and thus improving the results. So examiner want to say that sometimes you see an increase in a particular ratio, so it could be a genuine rise or it could be an artificial or fake rise. So you have to mention that this is due to because of operating lease we are not performing so well. It is actually due to the we have obtained some assets on the rental basis. For the gross profit and the net profits, variation in the ratios are a result of the change in the selling price and volumes or the cost of sales. So this is actually the point that you should understand. So if there is an increase in the gross profit, it means the company has increased the sales price, or it might be a reduce in the cost of sales. Okay. So this is the information I have extracted from a technical article. So it is very important and very useful article. If you just read this article and solve 2 or 3 questions, you will be perfect in the ratios. But you have to incorporate the hint in the examination, and the hint will be different in all the questions. So you have to use your own technical knowledge. The operating profit margins or the net profit margins generally calculated by comparing the net profit before interest and tax to the revenue using the. Okay, this is again an important point that sometimes examiner calculate the operating profit margin using the PBIT, or sometimes it uses the PBT. Analyzing the operating profit margin enables you to determine how well the business has managed to control its indirect cost. So actually, the changes in the operating profit margin is related to expenses, operating expenses, or indirect cost. But there is a clear link between the gross profit and the net profit. If the gross profit of the business goes down, so it is very likely that the net profit is also going down. In the exam, when interpreting the operating profit margins, it is able to link the results back to the gross profit. Yeah, this is what I have discussed already. However, it is not the case. The fall is not so severe. It may be due to good indirect cost control. So you should know the positive as well as the negative point of the movement, that why this ratio. B1 of profits on the disposal. distorted the operating performance. That is again a very important point. Like, you are praising the company, you are giving company a very good remarks that the company is improving well, company has grown well, or and all, blah blah blah. But when you see the current year, then you can see that there is a huge profit on the disposal, that the company has disposed of its significant major assets at the profit, and there is a significant profit on the disposal. So this particular point will be considered as a hint in the examination. Then you have to remove all one-off items. It could be a one-off profit, it could be a one-off loss, and after deducting this, you have to calculate the revised profit. Then you will get the actual position of the company. Like, uh, if I give you the example for this, if there is a gross profit of 600,000 in the previous year, and the gross net profit and 900 profit, so you can see there is a 50% growth in the profit. But the question says you that there is a gain on the disposal of 500 included in this profit. So when we remove this gain, which is actually a one-off gain, our performance is actually 400. And the negative impact of this disposal, because company has sold its non-current assets, so this will always be considered as a negative point for the business, that the company has sold its major non-current assets. So it will be it will impact on the future production, it will impact on the future profits. So now you are required to compare these two figures rather than 600 and 900. So company might overstate its profitability, or do some window dressing to overstate the profit. So being the analyst, you should know the basic difference between actual increase in the performance, or it could be due to one-off items, or it could be due to some artificial movement. Now here is a question for you. Which of the following current year's event would explain a fall in the company's operating profit margins compared to the previous year? So you have 1 minute to solve. I'm giving you just 1 minute. Please solve this question. Which of the following current year's event should explain the fall in the company's operating profit compared to the previous year? So, fall in the profitability. An increase in the gearing leading to the higher interest cost. So you all should know that the operating profit means the profit before interest and tax. So if the company's gearing increases, it affects the profit after tax rather than operating profit. Reduction in the allowance for uncollected receivables. So whenever we do the reduction in the allowance, the accounting entry will be allowance debit and income credit. It means the profit should increase rather than decrease. Our decision to value the inventory on the average cost from the first in first out. So we are moving from FIFO to weighted average. Okay. Unit price of the inventory had rising during the current year. So the prices is rising. So whenever the price is rising, the FIFO will give you the maximum profit and weighted average will give you the average profit. So if you are moving from FIFO to average, there will be a decline in the profitability. So C is actually the right answer. A change from amortization of the development cost being included in the cost of sales or being included in the administration expense. So there will be no impact on the profitability when the company is charging amortization in cost of goods sold or in administration expense. The profit will remain the same. Why not D? Like if I subtract sales 100, cost of goods sold is assuming it's 30. The gross profit is 70. Operating expenses is 50. Operating profit will be 20. So if we move a cost from the cost of sales to administration expense, so the sales remain the same. Suppose a cost of 10 has been moved, so it will be 20, it will be 80. And if we add this 10 million cost here, the net profit remains the same. So movement in the cost from cost of goods sold to operating expense will not affect the operating profit in total. C is dealing with the gross profit. Yes, but I have explained you that when the gross profit of the business goes down and nothing has changed from the previous year, the net profit will obviously go down because we calculate a net profit from the gross profit. In D, gross profit would increase. Yes, gross profit will increase. That's right. Now, current ratio and quick ratios are both the ratios for the liquidity. The liquidity problem is a very severe problem for the company. Whenever the company is facing a liquidity issue, you have to show in the conclusion that the company is facing a liquidity problem. They have to work on the liquidity. So the ideal for the liquidity is between 1.5 to 2 current ratio, and for current as quick ratio it is 1:1, or it could be zero point 0.9 or zero point 0.8 ratio 1. But however, this ideally will vary from industry to industry. This is again an important point. A business in the service industry would have the little or no inventory, and therefore would have the current ratio for less than 1. This does not necessarily mean that it has a liquidity problem, so it is better to compare the previous results or the industry average. So it is not compulsory and applicable. The ideal ratios is applicable to all industries. Okay, now this is the very important point. When assessing both the current and the quick ratios, look at the information provided within the question to consider whether or not a company is overdrawn at the year end. The overdraft is an additional factor indicating the potential liquidity problems. And this form of finance is both expensive, higher interest rates, risky, repayable on the demand. So I am giving you the maximum limit that how much technical knowledge that you should know about a particular ratio. So there is no need to uh, write like just essay on the current ratio and an essay on the liquidity quick ratio. Hardly 2 or 3 lines for each ratio is more than enough. But whenever you are solving the question of ratios, do ask it for by yourself that whether I am giving the fact with reason or not. So you should know that you should write fact with reasons, or and sometimes its future impacts. These are the receivable collection periods, payables, and inventory turnover in days. There are people who want the break. I just take a break after just reviewing this slide. So the latest collection period. So the key point is here: if the receivable payables are shorter compared to the prior year, it indicates a better control of potential settlement discounts being offered to collector. Whereas an increase in the credit period could indicate a deterioration in the credit control. So you only have to write one. For example, in a scenario, if the receivable collection period is increasing, then you have to only write the company's receivable collection period has increased from this days to this days, and it shows an increase in the credit. It shows a deterioration in the credit control or potential bad debts. That's it. So you have to write the fact with the reason. An increase in the payable term could indicate a business having cash flow difficulties, therefore delaying the payments using the suppliers as free source of finance. It is important that the business pays within the agreed credit period to avoid conflict with the suppliers. If the payable days are reduced, this indicates the supplier quickly, are being paid more quickly, and which we do because of tightening credit period, or it could be early settlement discount that attracts us to pay early. Finally, inventory turnover in days has increased. So for all these cases, the basic reason is here, but it could be the receivable turnover in days or payable turnover days increase might be due to the acquisition. So it might be increase or decrease due to the acquisition of a company or a disposal of a company. Then you have to write and you have to relate your answer with the acquisition or disposal. Generally, the lower number of days that inventory is held is better, as holding inventory for a period of the time constant cash flows increase the risk of associated with the holding inventory period. The longer the inventory is held, the greater the risk that it could be subject to theft, damage, or obsolescence. How the business should always ensure that there is sufficient inventory to meet the demand of the customer. So I think you only have to read these slides once, and after reading this, you will be perfect in the ratios. But the points that I have discussed should be in your mind. The first point is you should know the fact. Then you have to give the reason for that fact. And finally, you have to incorporate the hint in your answer. So these are the 3 points to get 100% marks in the ratios. So before starting the gearing, we should take a break of 5 minutes. Okay, welcome back again. So let's start with the gearing. The gearing is actually related to the amount of the debt that the company has got in the total equity in comparison with total equity or total capital employed. And gearing actually increases the risk of the shareholders because whenever the gearing increases, it increases the finance cost. So now there are two formulas that we should use in the gearing. So the gearing should be in the acceptable range. Increase in the gearing is dangerous for the company. If increase in gearing is only good for the company if the return on capital employed is sufficiently higher than its finance cost. The gearing ratio is of the critical importance of the business as it indicates how risky the business is perceived to be based on its level of borrowing. As the borrowing increases, thus the risk as the business is now liable not only to repay the debt but meets its interest commitment under it. In addition to raise further debt, finance could potentially be more difficult and more expensive. So this point is very important when there is an increase in the gearing and companies already facing a liquidity problem. So there will be two challenges for the company. The one is to repay the loan amount, and the second one is to cover up the liquidity problem. Whether the company is going can get the new finance for the market. So if the gearing is substantially high, it is in fact no that the company will not be able to find um, for the loan from the market, or it could uh, it could borrow the amount but on more expensive terms. If the company has high level of gearing, it does not necessarily mean that it will face difficulty as a result of this. For example, if the business has a high level of security in the form of tangible non-current assets and can comfortably cover its interest payments, a high level of gearing should not give the investor cause of concern. So if I'm working on a higher level and I'm working sufficient profits, so the gearing is not going to affect, but in fact it can give the benefit because the high level of gearing will give you the tax saving. Now these two formulas will not give you the same answers actually. The second one, this one is actually the capital gearing and this one is actually the equity gearing. So examiner will never ask to tell you to calculate both gearings. Examiner can tell you to calculate a single gearing for both the years. So you have to either use to formula this formula for both the years or this formula for both the years. Usually the examiner uh, is interested in debt equity ratio. Now here is a question for you relating to gearing. At 31st March 2015, Jassim had a shareholder funds equity of 200,000 and debt of 100,000. Which of the following transaction would increase the Jassim's gearing compared to that it would have been had the transaction not taking place? Gearing should be taken as debt or debt upon debt plus equity. Each transaction should be considered separately. So you all are required to solve the question and write your answer. In which situation, which of the following transaction would increases the gearing? So you are required to identify which transaction will increase the gearing actually. Can you elaborate the capital and equity gearing? Equity gearing is actually the comparing your debt with the equity only. So if you are the equity holder, you have invested 100, and I am the debt provider, I have invested 100 in the business. So the equity gaining is 100%. Means whatever the equity holder has invested, the same amount will be invested by the debt holder. But but the capital gaining means that how much debt you have in a total capital employed, means total equity and debt. So in a total capital employed, what is the percentage of debt holder? So the right answer is during the year the property revalued upward. So whenever there is an upward revaluation, there will be a downward decrease in the gearing. A bonus issue increases the bonus issue of the equity shares, increases will not affect the actually equity, so it will not impact on the gearing directly. A provision for the estimated damages was the reduced during the year from 21,000 to 15,000. So whenever there is a reduction, so it will not going to affect its gearing. An asset with a fair value of 25,000 was acquired under finance lease. So an asset with a value of 25,000 was acquired under the lease terms, so it will actually increases because your debt will be increased. So D is the right answer. Okay, now we are working on some comments on the cash flows. Now, how to comment on the cash flow? So these are some basic points that you should have to read from these slides. Now, how to comment on the performance of the business in cash flow? So according to IS 7, we prepare the cash flow statement under operating, investing, and financing activity. Okay. So we have to identify either we are performing well from the operating activity, from the investing, and from the financing perspective, and overall change. So first of all, when you are uh, writing the comments on the cash flow, you should know that the profit operating activity starts from the profit before tax, and we calculate the cash flow from operations. Then we have interest from here, then tax, or it could be a dividend from here. Then we got the value of cash flow from operating activity. So you should tell the examiner that what is the basic difference of the change between the profit before tax and cash flow from operations if there is a significant change between these two values. Then this cash flow from operations should be sufficient enough that you can easily pay the interest, tax, and dividend. So you are performing well in the operating activity if you are generating positive amounts and you can easily pay interest, tax, and dividend, and still you have the cash. That means that you are generating well and you're performing well from the operating activity. If the answer of the operating activity is finally positive, then you should know that how and where we have invested this cash. So it could be in financing or it could be in investing. Like this cash can be used or utilized in the purchase of the new assets, or it could be used for the repayment of the loan. Or if the answer of this operating activity is negative, then you have to tell the examiner that where the company is going uh, to settle this obligation. So the payment could be made from investing activity, or it could be made from the financing activity. Okay. The second one is the investing activity. If the company has a negative value or in the investing activity, means it is positive for the business. Is it positive for the business in the sense that a negative value in the investing activity shows that company has invested in the non-current assets, and purchasing new non-current assets will give you future economic benefits in terms of revenue, in terms of profitability, and in terms of improvement in the liquidity. But in a very short term, you will be facing a short term liquidity problem because the company has purchased non-current assets. But positively, positive answer of investing activity means that company has sold its non-current assets. And if the company has sold its non-current assets, then it is a negative point for the business perspective. So if the answer is negative, then it means that you should tell the examiner from where the company is going to purchase this or fulfill this deficit. So it might be from the financing activity, or it might be from the operating activity. So you have to link your answer. Or if the answer is negative, then you have to tell the examiner then where this positive cash, if the answer is positive, then you have to tell the examiner then where the company has invested this cash. It could be in the financing activity, or it could be in the operating activity. Similarly, if there is a positive cash flow in financing activity, so you have to tell the examiner where this positive cash flow will be invested and its future impacts. Might be company has used the cash flow to purchase non-current assets, or it might use the cash flow to pay the interest, tax, and dividend of operating activity. And its future impact that whenever the company has a positive balance, so it could be due to shares, or it could be due to loan. If the company has issued new shares in the market, it means you have to arrange dividend for that shareholders, or it increases the gearing and it increases the finance cost. Similarly, if there is a negative value in the financing activity, it means the company has repaid its loan. So you have to tell the examiner that from where the company has arranged its cash flow for the repayment. So it could be from the investing, or it could be from operating. And finally, you have to show the impact. So if I have paid my loan in the current year, so there will be a positive impact on the profitability in the future, because the gearing reduces the risk of the shareholders, and at the same time it increases the profit after tax. Okay, so you have to tell the examiner that if there is a positive cash flow, then you have to tell the examiner then where we have the company has used that cash flow, and if there is a negative cash flow, you have to tell the examiner where that negative cash flow deficit will be fulfilled. Then finally, at the end, if the company has a positive cash flow, it means the company has still cash to pay its liabilities, and it could be linked with the liquidity. And if the company has a negative cash flow, then you can say this, that uh, company is in the negative balance, means company is already in overdraft, and company is facing a liquidity problem. So whenever you are mentioning the conclusion to the examiner, never give any suggestion to the examiner, even you are solving ratios question or cash flow question. You have to tell in the conclusion what are the strengths and the weaknesses of the company, and If the company is not been able to improve its weak areas, it will impact its going concern in the future. So it should be the ideal. This should be the ideal conclusion for all the cases. Or there might be a case in the examination when there is a situation that you have to tell which company should have to be buy out of two options, which company the investor should have to invest, or which company should have to be purchased. So in that situation, the conclusion should be these are the strengths, these are the weaknesses of both the companies. Then the board of directors should have to decide based on the quantitative and qualitative factors that which company is suitable for the parent company or the company who wanted to acquire. So do not show a clear conclusion in any question, or give any your suggestion. Just show the strengths and weaknesses of the businesses. Okay. So now uh, I have completed all my slides. So now you all are requested, please, to solve at least 5 questions of consolidation, 5 questions of cash flow, 5 questions of ratios, and uh, 5 questions of final account. So starting from final account, the 5 questions will be Termalate, then Jugan, then we have Chamberlain, then fourth one is Sandown, fifth one is Triage. For consolidation, you should attempt Pender, Hosterling, which I have given in the, then Pacemaker, Premier, and the last one is Bicom. For cash flow, it should be Tabba and Kingdom. For interpretation of cash flow, it should be Pintu and Bengal. These questions are for the cash flow interpretation, and these questions are for the cash flow calculation. Then consolidation, final accounts, finally ratios. The first one is Duke Company that we have discussed here. Second is Pankit Company that is mentioned in the last two papers. The third one is there is some um, there is some information. Okay, the third one is Quartile. The fourth one is Herbin. Fifth one is Vicular. So if you do all these questions till the examination date, you will be 100% perfect, and inshallah, your paper will be 100%. So please give your valuable feedback about the session. Please join the WhatsApp group for further discussion. I will share the cash flow video over there, and also uh, so please explain the NCI share of goodwill in disposal of the subsidy. Please explain the NCI share of goodwill. You not have to adjust the NCI share of the goodwill. You have to take the full goodwill when you are doing the disposal question. So do not separate the NCI share of goodwill. Just take the complete goodwill. You will get the right answer. Okay. Then it's very important and highly recommended for all of you to do at least 20 to 30 MCQs on a daily basis. The management will share you the WhatsApp link, my cell number, and the email address to all of you. So please connect on the WhatsApp group. Secondly, uh, try to, if you have some issues, you can email me, you can contact me. Till the examination date, I'll be available for all your support, because it's an honor for me that ACCA has selected me for this practice to pass session. So I'll be available till the examination date. And please give your feedback, positive or negative, about the session. And uh, your basic feedback should be in a manner that whether this session is going to benefit you in the 4 days or not. So is it beneficial for you or not? Whether this type of session should be conducted in the future. And I teach paper F7, paper F8, and SBR, so I can help you even in the future papers. So thank you very much for all your kindness and support, and stay connected on the WhatsApp group. And from where do we practice the MCQs? MCQs do the practice of Kaplan and BPP kit. Uh, this in some questions they took only NCI share. Do not follow the answers of the examiner. Follow my rules, and my slides is very important. My handouts is very important, and all these questions are very important for passing the examination. So thank you very much, and the cash flow format will be provided to you uh, in the video link that I will be sending to you. So thank you very much. Take care. Allah Hafiz. Best of luck for the examination.